let's talk about financial statements. Statements that we're going to look at this week are the income statement, the statement of owner's equity, and the balance sheet. There is another financial statement called the statement of cash flow, but we can go over that in a subsequent chapter. There's a set, so when we prepare financial statements, you typically make the income statement first. So the income statement shows revenue, expenses, net income, or loss. So you can have multiple streams of revenue. We'll just call total revenue, just say it's 100. Total expenses, you can have, from the textbook, we can see, there's many expenses: salaries, utilities, administrative, general and administrative, anything. You can basically make any line item you want. There's no set rule on that. But if your revenues exceed your expenses, say I think I had mentioned if revenue is 200 and the total of your expenses is 100, you have net profit or net income of 100. On the flip side, if your revenues are lower than your expenses, you have what's called a net loss. All financial statements have a 3-line heading. So in the textbook, we see Wells Consulting Services. So you always have the name on the first line. Then you have, let's call it the what line. What is it? It's the balance sheet. When? Balance sheet is December 31st, 2016. The same thing with the income statement. The balance sheet is different than those other types of financial statements I mentioned. So the balance sheet is a point in time. Think of the balance sheet as a picture. Think of the income statement and the statement of owner's equity as a movie. There's whole different types of pictures in this movie. So think about the old movies we saw with Mickey Mouse, and it's the same with the movies today. All movies are just lots and lots of pictures. So where I'm going with that is the balance sheet. Think of it as a snapshot in time. You take a picture of your phone, bang, there's your balance sheet. The income statement is January 1st, January 2nd, January 3rd, assuming a calendar year, fiscal year end, all the way till December 31st. So it's all the activity of the operations through many days, and in that example would be 365 days. So for example, if we had a year-end balance sheet of 12/31/2018, that balance sheet will be, okay, as of 12/31/18, here are all my assets, my liabilities, and equity accounts. The income statement is going to be that roll, that movie from 1/1 to 12/31/18. Same thing with the statement of owner's equity. Statement of owner's equity shows the beginning balance, shows net income for the time period. And the time period doesn't necessarily have to be a whole year. It can be 3 months. It can be a month. Typically a month, 3 months. It can be semi-annually, a quarter. So you have the net income. You subtract or deduct any withdrawals to the owner, any increases in capital, any additional paid in capital. If I'm the owner of a company, I want to contribute money or other assets, non-monetary assets to the company. We would see that here, which would give us the ending balance in the owner's equity statement. The balance sheet, as we can see in the textbook, it could be showed a couple ways. Left side is assets, right side equals liabilities and equity. And remember, that's the picture the accounting equation there. So the assets equals liabilities plus owner's equity. And that's a good way to think of these journal entries. So we're soon going to be preparing journal entries. I just want to give you an overview of what those journal entries are going to make. You're going to see that we're going to have journal entries. We're going to have something called a trial balance. When we close everything out in the ledger, the adjustments, and everything on this big worksheet, we can actually make the financial statements from there. But I wanted to give you an overview of what's on each statement and what the statement represents. So the balance sheet, you have assets, usually in the order of liquidity: cash, accounts receivable. Accounts receivable is nothing more than I sold something to you and you were going to pay me. Supplies, prepaid rent, equipment, and the list can go on and on. On the right side of this statement, or it could be a single form. You have the debt. So the assets are what the company owes. I'm sorry, what the company owns. The liabilities are what the company owes. And think of equity as a residual. Think of equity as assets minus liabilities equals equity. So it can get a little confusing there with the accounting equation. So the income statement, the net income from the income statement flows down to the statement of owner's equity because we need that net income to show the changes in the equity. The changes in the equity, basically the last part of that is going to be the ending balance for some time. So the text says December 31st, 2016. Take that figure, and we're going to need that figure to help plug or balance the balance sheet. So there's a specific order for these financial statements. It's going to be the income statement. It's going to be the statement of owner's equity. It's going to be a balance sheet. So let me know if you have any questions. And the balance sheet, income statement, statement of owner's equity, and even the cash flow, as we'll learn later, that is going to be the end product of what we learn in accounting. Accounting is a bunch of journal entries, and we think of journal entries, we're going to think, okay, what affects what? So if I just say I buy equipment with cash, what's going on there? I'm increasing my asset that I'm buying, just say it's an equipment, but I'm decreasing another asset. So from an accounting equation point of view, and I'll make another audio on that, is that's basically just the left side of the accounting equation where assets go up, assets go down, and we're in balance. So every time we have a journal entry, the accounting equation, no exceptions, will always be in balance, whether we're increasing an asset and increasing a liability, decreasing asset, decreasing liability. So that's always going to be your checkpoint, so to speak. So hope this is well. If there's any questions at all, please feel free to post in class.